All right, everyone's talking about it. Let's talk about the big buzz topic this week, the proposed 50-year mortgage. Some are calling it the best thing since sliced bread. Others are saying it's going to crash the housing market. While there is really one important thing that matters, and that's the borrower's needs. Hi, my name is Munar, CEO at Collab Lending, and your bilingual mortgage guide to mortgages in Puerto Rico and the US. I've been helping families for over 2 decades, and I also invest myself. So today, I want to break down with you the real numbers, the pros, and the cons. So here's the deal. 50-year mortgages aren't some brilliant new Trump idea. Countries like Japan, Canada, and the UK have been experimenting with extended mortgage terms for years. Japan even has a 100-year mortgage amortization. Why, you ask? Because housing affordability has become a global issue. When space tightens, income lags, and prices are rising, governments around the world are looking for a way to still help people get into homes. In simple terms, extended mortgage terms allow for housing affordability to be accessible again. Now let's talk about what this means for real people. Imagine finding your dream home, one that checks off all the boxes, but your debt-to-income ratio is off by $50 to $300. That's where a 40 or 50-year mortgage could make the difference. It's not about buying more home than you can afford. It's about giving families the opportunity to buy in a market where rates or prices are higher. If it allows a family to purchase a home versus rent, now that's worth a conversation. Let's look at a quick example. A $400,000 loan at 6.875 on a 30-year mortgage has a payment of about $2,630 a month. On a 50-year mortgage, the same loan drops to around $2,200 a month. That's over $400 a month in savings, which could be the difference between getting qualified and getting denied. And here's what the data show. Most homeowners either move, refinance, or pay off the mortgage within 7 to 10 years. Life happens. You move for work, you have a growing family, or you refinance when rates or terms are better. So whether it's a 30-year or a 50-year mortgage, most people never see it to the end. That's why I always say the mortgage is a tool, not a tattoo. You can always refinance later when terms are better for you. Now, let's look at the flip side. If a 50-year loan becomes widespread, yes, it could increase demand and prices could increase. But on the other hand, this is allowing families to build stability and equity instead of staying stuck renting. And the interesting part is that on these longer amortization loans, they build equity faster. So at the end of the day, this is about wealth creation and keeping the American dream alive. So instead of asking if a 50-year mortgage is good or bad, ask yourself this. Does this allow me to own a home, put me in a better financial picture, and build equity? For some, the answer is yes. For others, a 15 or a 30-year might still be better. There is no one-size-fits-all. There is just a what fits your goals. My advice, talk to a professional who will look at your entire picture, goals, long-term plans, and budget. I'm Munar with Collab Lending, and my mission is simple: to educate, empower, and help you make smart decisions that build wealth, not stress.